on Bloomberg Quint.
The tensions between the Reserve Bank of India and the government have certainly grabbed attention domestically, but these tensions, if they continue to get played out this publicly and acrimoniously, could also hurt the country's perception among foreign investors. How is the global community viewing what is happening back home in India? Joining us for review is Krishna Memani, Chief Investment Officer at OppenheimerFunds. Thank you so much, Mr. Memani, for speaking to us here on Bloomberg Quint. You authored a piece for us as well, where you said that, the first thing is the manner in which this is being played out, with both sides seemingly hardening their stance and continuing to go at each other through public comments, speeches and barbs. Doesn't look good for us.
It most certainly doesn't. As I wrote in that piece, if the Indian government wants to import capital for the long-term growth of the country, foreign investors, and for that matter, domestic investors, would need some level of confidence that everything is going to work out the right way. And maintaining the credibility of the central bank to fight inflation, if that's what they have to do, is a significant component of that. And this public spat really doesn't help. On the other hand, I think Viral Acharya taking it to a public press conference and kind of going at the finance ministry doesn't help things much. So I think things need to cool down, and these are sortable things. These are technical matters for the most part, and they can be figured out. And trying to do it in newspapers and news conferences and throwing stuff at each other doesn't seem like the right way.
Mr. Memani, let me just talk a little bit about the substance of some of the bigger issues. You mentioned the credibility of fighting inflation. Now, we in India have recently moved to a monetary policy committee regime. So one view is that the independence of the inflation targeting regime is now enshrined in a different framework. And what is playing out now is a more sort of regulatory spat, which perhaps foreign investors may not view as seriously as a spat, which would dent the inflation fighting credentials of a central bank.
Well, to some extent it is true, but it is not entirely true. The health of the banking system and how the regulatory regime works is just as critical as monetary policy. So, but you can't just look at monetary policy in isolation. You have to look at monetary policy in the entire governance structure that we have. And that is about fiscal policy, that's about banking regulations, that's about labor laws. All of them are relevant things for foreign investors.
How seriously would you view, Mr. Memani, a possibility that the central government could take a part of the capital away from the central bank's balance sheet? Again, the substance of the issue and the manner in which it's done would both be important for foreign investors?
Oh, yeah, absolutely. So, at the end of the day, the question that you have to ask yourself is, why does the central bank want those excess reserves? They want those excess reserves so that they can spend it, right? So that is, at the end of the day, that is really the questions. They want an expansionary fiscal policy, and there's a pocket of money out there that they can grab their hands on. And as foreign investors, we don't think, having that level of spending, even if it seems that the fiscal deficit is not widening at a time when inflation may be inching up, for example, and you give the central bank the flexibility to spend that newfound money. I mean, it'll exacerbate the inflationary pressure. So it's really about spending far more than reserves and who can get hold of those reserves.
Would you also contextualize what is happening against the backdrop of the fact that we're running into an election fairly soon, Mr. Memani?
Politicians are politicians. At the end of the day, one of their highest priorities is to win elections. And if they spend more money, then the likelihood of winning elections goes up. So absolutely, I think the timing of it is not an accident. It is very deliberate. They need some money to spend for the elections. And given where the fiscal deficit picture is shaping up, this is found money for them.
Mr. Memani, you in your piece also put this in the broader context of independence of institutions, not just the Reserve Bank of India. We've seen domestic spats on, the Central Bureau of Investigation. We've had, a tussle of sorts between some parts of the Supreme Court as well. Has all of that sort of registered in the foreign investor community? Because some of that may not be directly sort of economic in a sense.
Well, absolutely. I think if you are what we call a tourist investor in India, you don't really care about things. But we have been in India for decades. So for us, one of the reasons why we've thought India was a really good emerging market to invest in was because of the solidity of these institutions. And an attempt over the last few years to go at them, I don't think ends up being very productive for any government in the long run. Today, politically, you may win. Today, you may win a spat here and get your things in better shape from on the TV screens. But at the end of the day, you chip at these institutions from long-term perspective, and for long-term investors, that's a really bad outcome. At the end of the day, that is really the crucial point I was trying to make. Reserve Bank is one pristine institution, has some level of credibility in the marketplace, and if you kind of go at it, that is not going to be productive in the long run.
Can I also put this debate in the broader context of what's happening, across various parts of the globe with central banks? We've seen President Trump say that the Fed has gone crazy. For different reasons, I completely get it. But in different parts of the world, there is, the question of how much autonomy technocrats at a central bank should have or not. Is India any different, or is it within that larger global debate?
So, I think that is a good question as well. That is, the central bank should be independent, but the central bank cannot exist outside of the political context of the country forever. The reason we set up central banks as separate institutions is at election time, for example, they are not tempted to do things that they would be tempted to do, and the policy can be far more consistent for the long run. But at the same time, if the central bank, the Reserve Bank of India, thinks that it is totally out of the political context and they don't have to be at all considering the situation that an duly elected government with a large mandate needs to do, I don't think that's a long-term solution either. So it has to be in the context of the policy or the politics of the country, and that is true in emerging markets just as much as it is true in developed markets.
Are foreign investors less forgiving, though, of these kind of issues playing out in emerging markets? It seems to just add on to the risk perception of some of these markets. I don't want to compare India to Turkey, different economies, different indicators, but we saw how investors reacted to that.
Of course, and there are lots of examples like Turkey. And if somebody makes their son-in-law as a central bank governor, I think they'll have to pay a price in the markets. And that is especially true if you need to import capital. I think, take China, for example. Their domestic savings are so high, they don't really need capital anymore. They used to earlier. But if your situation is not that and you need to import capital, the sanctity of the institutions of the country are going to be a significant component of what the cost of that capital is. And a country like India can't afford foreign capital coming in at 10–12%. That's just too expensive capital for you to generate the returns and grow the country at the same time.
Mr. Memani, since we have you here, let me ask you for a view on India beyond this as well. We haven't had a great year from a foreign investor standpoint. Debt was the first place where the selling hit and has continued until at least recent days. Equity saw some outflows as well last few months. What's the view right now on India, sir?
Well, so I think India is viewed as the low beta emerging markets, and that really has not changed. So it hasn't been a fun year to be an investor anywhere, and it certainly hasn't been a fun investor to be investing in emerging markets. I think it's the strength of the dollar, it's the growth outlook in the U.S. being materially different and better than the rest of the world, relatively speaking, and the trend of rates really has determined the direction. Having said that, our position remains that by middle of next year, things start slowing down in the U.S. The dollar strength regime fades very rapidly, and it's dollar weakness over the next few years, and I think that will lead to a good investing environment for emerging markets, including India. The challenge with India is, and has been in this cycle for emerging markets, is the valuations, relatively speaking, are the highest in India relative to other emerging markets, and even with the correction that we have had, that really hasn't gone away.
All right. Oil, though, sir, could prove to be a bit of a silver lining if global growth starts getting pegged down. We've already seen a near 20% decline in oil, which has come as a huge relief to India.
Yes, the uptick in growth, or expectations that growth globally is going to remain very high, had led to higher oil prices. Iran sanctions certainly had, and the fact that the U.S. granted exemptions to certain countries has helped bring things down. But at the end of the day, it's really what growth picture is going to look like middle of next year, and I think things are going to get softer and inflationary pressures probably fade. That's a good environment for long-term investors, I think.
All right, Mr. Memani, I'll leave it there. Thank you so much. It's a pleasure hearing your views on India, but also most importantly, the current spat that's going on between the central bank and the government. Thanks so much.
Thank you.
Completing 100 years